In this new video series, go behind the scenes of our prop firm, which houses numerous elite 7- and 8-figure traders, to learn our techniques and processes for producing robust, high-accuracy options trading strategies. In this case, a powerful option strategy with an 85% win rate. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In part one of this new video series, learn a key trading principle that has helped our traders thrive and how that drove the development of this new and powerful option strategy for you. Let's get to work on sharing this important trading lesson and trading strategy so that you can grow your trading account. One of the brightest and hardest working traders that we had recruited at our firm was fledgling as a trader. I actually remember visiting him when he was in college, on his college campus, meeting him, talking to him, and being super impressed. As impressed as probably any of the traders that I talked to during an interview process. I mean, just really top-notch intellect, smart, working hard, really into trading, the type of person you really want at a trading firm, but just fledgling. And we sat around conference rooms like this with all of the internal resources at our firm, the coaches that we have, the senior traders we have, our floor manager or other partners, trying to figure out how to get this trader jump-started. How do we get this guy on the right track? Super talented. How do we do it? And so we decided, hey, let's change his team. Let's change his team to that's run by a senior trader really into technology, really into a very specific type of trading that relied very heavily on technology and the development of technology. And we put him on that team. And he started to learn some new niches. He started to learn how to use the technology to help him spot those trades with edge. He started to contribute heavily to the team with variances on what he had learned from them. And this trader, who we were all rooting for, who was fledgling and floundering, started to thrive. In fact, he did so well that he became one of our most recent black shirt traders. And to earn a black shirt at our trading firm, you need to make $2 million net in trading profits for the year. That's not over the course of your whole career. That means in a year, you're making over $2 million net in trading profits. And when I think back on that, if he had just been a discretionary trader, not tapping into technology, if he had just been a trader relying on his own thoughts, his own intuition, his own pushing of the buttons, as we say at the firm, he may not have made it as a trader, as talented as he was. He may not have made it. He probably wouldn't have made it as just a discretionary trader relying on his own thoughts and him pushing the buttons. But putting him in an environment where he's tapping into technology and with a senior trader that really knew how to use the technology, that had developed edge with technology, with alerts, with scripts, with automated trading. We'll talk some more about that. Showing him how to do that made all the difference. You went from somebody probably not going to make it to somebody becoming one of the top traders at the firm, a black shirt trader and better. And being able to experience, and I remember talking to this trader back in college and how much he wanted to be a professional trader, how important that was to him. That change was the difference between not achieving his potential and not achieving his goals, and him doing it, him achieving and fulfilling his goals of being a professional, highly successful trader, and all the rewards that come along with that, all of them. And so we're going to talk a little bit more about technology the importance of it and how we use it in a specific sense at the firm. I want to bring in Seth Freudberg, who runs our options trading desk here at S&B Capital, and ask him, Seth, how are you using technology most recently to assist your trading business?
Well, Mike, options traders, and I'm the head trader of S&B's options trading desk. Options traders, like most traders, are always seeking a way to be able to predict the direction of the market. And options traders have ways of trading the entire market through index options. So it's very helpful to have a way to predict the market. There are signal providers who purport to be able to actually predict which way the market will move on any given day. In some cases they're right, in some cases they're wrong, but there are people who make such predictions. As an options trader, to be able to have access to a really high quality, reliable signal as to which way the market will move on any particular day would be exceedingly valuable. We've known this for years, but have struggled with finding a signal that in fact actually is reliable. So last year, I met with a guy named Scott Andrews, who's here today. And Scott has a firm down in North Carolina known as InvestaQuant. And it turns out they do have that signal that we've been looking for many years. And so this has been a game changer for the options desk, because now we are able to make one-day trades with a sense of reliability that the majority of the time our signal is going to be correct. The signal we receive from Scott's firm is going to be correct, and it allows us to set up high probability options trades that are consistent with that signal. So Scott's here with us today. The first question I want to ask you, Scott, is there may be people in the financial world who think it is a myth that there's any way that you can actually predict what direction the market is going to go in one day, that it's too complex, there are too many factors involved, and no one can know, and anyone who tries to tell you is simply conning you. So do you think it is possible to predict the way the market will move on any given day?
Yes, on any given day. Every day, probably not, right? The markets are indeed way too complex to predict with a high degree of accuracy what they're going to do every single day. However, there are market tells, right? Indicators and certain data points that you can use to predict some of the days, right? And as a trader, we don't have to be able to predict every day, just some of the days with a high degree of accuracy, and we can do quite well. So yes, you absolutely can, but it's far, far more complicated and more difficult than most realize. I've been doing this 15 years. I thought it would be much easier. I have a math inclination. I'm not afraid to do a little bit of coding, though I'm not really a technologist. And I'll just tell my own story to you and Mike. As a developer or a wannabe developer, I started assessing and creating factors that I thought would be predictive of what may happen that day, because I like to trade intraday timeframes. So in order to trade an intraday timeframe, just as you may be interested in identifying a longer term trend to swing trade, I'm interested in identifying what's going to happen today, right? Is the market likely to go up or go down, and use that as sort of the wind at my back trading intraday. So we started putting factors together, a friend and I, and we started testing them, and we started creating models. He was a developer, a coder. I'm a passionate person. I knew I didn't want to be a discretionary trader. That wouldn't go well.
I won't take that personally.
But we knew we could assess and back test these different factors. So we started doing that, and we started creating signals, and they didn't work. And they kept not working. And we learned sort of the hard way. There were a lot of problems with traditional signal development. You just can't pick a few different factors. And I can tell you, we picked, I thought it made sense to take a trend indicator, take a momentum indicator, and take a overbought, oversold indicator, Bollinger Bands. Put them together, and clearly when we tested them, they actually looked pretty good. We only traded in certain situations when we were above a moving average, when the RSI was at a certain level, above 20% I think was the number we used, and when we were not beyond the Bollinger Bands. So it back tested incredibly well. In reality, it failed miserably right out of the box. So it took as many years to sort of figure out, took a few years to sort of figure out what was going on. And bottom line is there's several reasons that traditional signal development doesn't work. It wasn't just us. You can talk to 100 people that have ever tried to code a signal or create a back-tested system, and 1 in 100 might have some success over the long term. Anyone can make money in a given month, right? Or even a given year and have a system perform well, but few, very few, hold up over time. There's 3 reasons that I think contribute the most to traditional signals and system development failing. First and foremost, they lack market context. They identify a few factors like I did early on that backtest well, they make sense, they understand the logic, but they don't really provide enough context to the broader market environment, right? So think about a trade. It has a setup and a market environment is the way I think about it. If you accurately define a setup, it's going to take several factors. Whether you're using indicators or price action, no matter how you think about it, there's several factors that have to be identified. Well, you need to do the same thing with maybe a different time frame, maybe different indicators for a broader market condition. That creates the opportunity. But when you put all those things into a single system and you code them up, they maybe have happened 100 times in history in the past 20 years. So you've only got a sample size of 100 so opportunities if you traded them all even. So the problem is actually a math one, and it's a real simple one. The desire for trade frequency and to make money is at direct odds with trade accuracy, right? The more accurate to get accurate, you have to have more context. The more context you provide, the fewer trades you get. The second challenge, if you will, is that when you realize that you can't get as many trades as you want, you sort of loosen your parameters, and that leads the developer, most developers, to use the technology. There's a very powerful technique called backtesting and optimization to identify the best inputs and the best exits for the strategies. You push a button, it cycles through every moving average, and you can identify what's the optimal moving average historically to identify a setup. Or you can push a button and optimize what's the optimal target in terms of points or dollars or percentage of average true ranges for your target that you want to use or for your stop. And you will come up with a beautiful back test that will give you great confidence and you will want to bet money on it right away. The challenge is they always fail. Eventually, maybe not right away, but most of them, if not all of them, eventually fail when you use optimization to find exactly what would have generated the most money historically. Because you're only looking backwards. You're culling through, you're cherry picking all of that data. And you're rationalizing logically, oh, it makes sense. I should have held for this point and I should have gotten out here. But it just doesn't hold up in time. And then the third factor that causes, and this one is, I think, a little more less obvious perhaps, and that is in developing these rules, right? That's all we're doing is creating rules that some people trade algorithmically, like myself and our team, or you guys on a discretionary basis. These rules are static, right? Just by definition. In fact, at the moment that you finish the rules, there's a shelf life to those. They're getting older and older and older. And the markets are not static. They're always changing. That's one of the biggest challenges, maybe the biggest challenge of all, right? It's not like predicting, we do a lot of machine learning modeling, and not really AI, but machine learning modeling, and it's actually very easy to predict things like certain types of cancer, breast cancer. Actually, they've got it down to pure science. There's 20 factors, they can identify them, and with an incredible degree of accuracy, predict if someone's likely to get breast cancer or not. But the markets are different, right? Because you guys identify opportunities, we identify opportunities, other market participants identify opportunities, and it changes our behavior. We start trading that edge or that angle, and over time, sort of that opportunity gets arbitraged out of the market. The market behavior changes. It's not as profitable as it used to be. So now your rules have to change, and if they don't, you can start losing money. So those are three very complicated, big topics, but I believe probably the biggest three challenges that all signal developers are faced with, and they're not easy to solve. We've been doing it a long time, and we're still working through them, some of them ourselves, but we have found a few ways to mitigate those risks and create a reliable signal.
Yeah, we just finished our summer internship program here at S&B Capital, and we have a bunch of young college students come in, and we teach them discretionary trading, and then we also teach them automated trading. We teach them both, and we give them paths for them to be a discretionary trader, an automated trader, or a hybrid trader doing both. And one of the most ambitious, hardest workers in our last class had worked on a model, as you mentioned, during the course of this internship. And you know, think about this. There's a select group of people who have been selected to be in this internship program. And the whole idea of the internship program is to be hired at the firm and to gain all the resources at the firm that they have and sit around all the wildly successful traders that we've developed and tap into all the resources. And I would come in here during the internship program on some of the weekends. And each time I came in during the weekends, I happened to notice that this one particular intern was here working whenever I came in. And I would go over each time and say, you know, what are you doing? He said, well, I'm back testing a couple of ideas. And, you know, at the firm, we have these resources where you can come up with an idea, back test it, forward test it, and then run it live on your desktop. It's very unusual to have the ability to be a discretionary trader and automated trader at a proprietary trading firm. But they have those resources, and we teach them that they should be tapping into not just discretionary trading, but also technology automation. And this one particular highly ambitious trader who's here all the time working computer science from a prestigious university student came to me towards the end of it. And you know, just think about this. If during your internship you come up with a model that works, that's a good thing. That's going to really probably help you get hired at the firm. That's going to help you to stand out. And all these guys are trying to stand out and get selected. And so he comes to me and, you know, is elated that he's found this really great model. And, you know, I thought it was great that he did the work, and, you know, he had back tested it and everything was coming out great. And then we send it to some people who really know how to model. There's kind of two layers behind you just coming up with a back test that works. And when we sent it to those more experienced guys, you know, it turned out that that model, well, you know, pretty clever, just wasn't going to work. It wasn't going to hold up. It wasn't robust enough to be able to handle different regimes. He hadn't factored in a couple of things he should have. I mean, you got to factor in slippage. You got to factor in scalability. You have to figure out when the markets change. And so, yeah, I mean, it's not easy to be able to come up with models that work, signals that work, that really stand the test of time. And, you know, from your work, Scott, you've gotten there.
Thanks, Mike. He's not the first to struggle and maybe not achieve his goals. He certainly won't be the last when it comes to trying to create a quality signal and strategy. These challenges are hard, they're real, they affect everyone.
Well, Scott, how have you been able to overcome some of those challenges?
Well, it was a lot of practicing and a lot of reading, and ultimately I realized there was no silver bullet to any of this. We had to tackle each of these challenges individually, so that's what we've done. And as you can see here, we've had to rethink sort of the entire process of the traditional development approach, and done properly, it has, not only does it, but it has for a very long time generated signals that have continued to perform well out of sample being after you've done your back-tested research and moving forward, not only in a simulation environment, but in live trading for many years. So there were several things that we did, and I'll address each of the points of the challenges. The first one that most developers struggle with is too few inputs, right? Not enough market context. The example I gave previously said that one of the key challenges was too few inputs. And we rethought that whole process and said what we're really trying to do is better identify the trend, momentum, the state of the market from an overbought or oversold situation, volatility, calendar and seasonality conditions. All these individual indicators that we were trying to come up with and add to our algorithm really needed to be their own system in order to really have robust analysis. The markets, again, are just too complex, too many data points. So we ended up creating individual systems focused on each of these key factors that we believed were important to be predictive. And obviously it took much more time. It took us years to do this and to really sort of get it right, if you will. But now we have many different systems that focus on different factors. They each create their own signal, but we don't trade the individual systems. We trade the collective signal that is generated by all the systems. They rarely all agree, and that's another key challenge that I could easily talk about as well. What do you do when you don't have the perfect signal? Well, first, you accept you're not going to have a perfect signal or a perfect setup, right? Even in the discretionary world, it's a judgment call. We use math and statistics to make that call from our different systems. So there are many ways to get a signal out of many different systems, but the key premise of using different systems that look at different factors and diving really deep was the way we broke through to this whole robustness concept. And that really is what we do. We have a very robust approach because we're doing such a deep dive every single day into each of these factors that can be predictive for what may happen.
We understand that most retail traders don't have the time, expertise, and resources to develop a sophisticated, mathematically accurate signal system like the IQ people did to determine the likely direction of the market each day. And so SMB has taken care of that for you. We've developed a highly profitable trading system based on the IQ signal that can easily be implemented by traders of any experience level in just minutes a day. If you're interested in learning more about exactly how that system works, go ahead, click the link that should be appearing now at the top right corner of your screen. That will open the free workshop registration page in a new window, so don't worry, you won't lose this video. I think you're going to be pretty intrigued by what we've developed for you, so pause this video, sign up, and then resume watching.
The second thing we've done that, and all of these I guess you could argue are designed, but it wasn't architected that way, it's the way we evolved. But we did make a intentional decision, a design decision, that we would not have any part of our process that required optimization, because we knew that optimization would always feed us results that were grossly exaggerated from what we would get in the real world. Especially when you optimize all the different little inputs, they collectively, you can double, on paper, double what your expectation should be. So we just made a design factor. We wouldn't do that. Instead, we chose to create market states for each of these systems. So every system looks at trend and the state of the market, different time frames, right? What's the trend for the past 3 days, the past 10 days, the past 100 days, past year, right? You can do it. There is no right or wrong. You just need to have a diverse group of time frames. You can choose market states for momentum. Do we have strong momentum right now? We can be in a strongly trending market but have no momentum, right? We're hanging out near the highs. Many different ways to define that. We created states for each of these systems. So there's no optimizing for us. We're not trying to pick the right moving average. We're just discretely defining different market states for each of these concepts. We don't, and because we're predicting is the market to go up or down on a given basis, there's really no optimization of the exit, if you will. We're not trying to pick a target. We're just trying to predict is the market going to close up or close down on a given day. So by design, no optimizations, which is also a huge confidence booster. And the last thing we've done, and this was the hardest by far, frankly, is that we've made the systems adaptable to overcome the fact that the markets are not static. If the markets are not static, your rules cannot be static. So a traditional developer knows that, an experienced one that has survived knows that, and they go back and fine-tune and re-optimize their different inputs on a regular basis. The more frequently, the better, because again, the markets are changing so quickly. Just being very blunt, we didn't want to do that. That takes too much time, too much energy. It opens up another wave of variables and room for errors and so on. So by design, we created our system to be adaptive to the market and its own performance, and both are critically important. So the market's changing every day, so we need to know what that is and feed it into the systems. So each of our factors, we're reevaluating trend, momentum, overbought, oversold conditions, volatility, calendar considerations, and so on, down this long list of factors. All of it being updated every single evening. It then allows us to have a completely honest, accurate, real-time perspective of the state of the market from a very robust point of view. But the thing that we did that really was sort of the magic, and this is also not easy to do, was just because we know what the market conditions are, that doesn't answer the question, do our old rules still work? So we added a machine learning element of it that takes and evaluates and updates our performance every single evening for all of these different market states for our signal. So we can be in a market state on a given date. It's really a bunch of market states, right? We're in a certain trend state, momentum state, overbought, oversold state that used to be very profitable 3 years ago. But because the market conditions have evolved, I should say the market participants' behavior has evolved and they're no longer trading it the same way. Maybe that opportunity's been arbitraged out, is no longer there, and now it's in a different environment. By putting in a performance input, it requires, or enables us, I should say, to only trade when those market states are still profitable and meeting our performance criteria. So adapting to the markets and adapting to the performance in those market conditions has really been the key for making our systems adapt from day to day and do so consistently and fairly consistently well over many years.
So Scott, is it fair to say that we're not really trying to solve what the market is going to do, what the direction of the market is going to be every day? We're just trying to figure out a couple of days, a month, which direction the market is going to take. And we're not relying on one signal. We're relying on a bunch of signals all aligning, a signal of signals in your work, waiting for that to happen, and then taking the signal when all that happens. Is that fair to say that, when we talk about the special sauce of why your signal is successful, that it's those two key factors?
Absolutely. It's a signal derived from many different systems that all create their own signals. So instead of having one smart guy giving you advice, you've got a room full in your boardroom, right, giving you advice. So it's the collective wisdom of all the systems that creates that single system. I will say we are trying to predict, our team is trying to predict what's going to happen every day, but the signals only align, the markets only align in a way that gives us confidence to risk capital 2 or 3 times, 4 times in a given month.
So Scott, how long did it take you to develop this, and what kind of resources went into it?
Well, it took a lot longer than we thought it would, that's for sure. The markets are indeed very complex, and the concept was one thing, but to actually put it in action took a lot of work and a lot of resources. We ended up hiring a small team of developers with different expertise in terms of data wrangling, as they call it, and from a quantitative side, statistical modeling. And we put the team together and built this adaptive ensemble is just a group of systems, and started creating historical data and looking in sample and out of sample, how would they have predicted and how well would they have done. That took a couple years to really get that built out the way we wanted it to adapt to the markets and their own performance. And I got to a point where I was comfortable trading it with my own capital, sort of out of sample, walk forward as they call it. I did that, had amazing success. We shared it with some clients. They were very excited as well. And we knew we were really onto something. So We did want some further validation though, because there's always a chance, even with 6 months of data, that it could be some randomness in there. So we ended up hiring the Duke University Center for Quantitative Modeling and a small team from them to basically give us the statistical rigor that we needed to break apart the rule sets and make sure that we hadn't made some mistakes like look-ahead bias, which can give you false positives. You think you've really onto something because it's always getting the market right, and really it was looking ahead without you realizing it because it had access to the data and what happened. So that project lasted about 6 months, and they basically said we passed with flying colors. They had lots of suggestions for us on how to improve it a little bit further, and they really helped us answer the hard part of the question, which was how do you get a signal out of a bunch of different systems with their own signal? Do you average them up? Do you count them? There's a lot of basic math challenges there, but they helped us address that. And in fact, the director of the program ended up joining our board, becoming an investor in the company as well. So to me, that was the greatest endorsement we could have, that he wanted part of the action, I guess.
So if it took that many years, this must have been a fairly costly adventure.
It was. The payoff is obviously huge for getting it right, and a failure wasn't really an option for us. So yeah, it ended up taking about 4 years total. 2 years creating the initial core program, and then testing and refinement with the help of Duke. So total about 4 years, and we still do a little bit of testing and refinement, of course, always looking to improve every angle we can. We've probably spent $1.5 million just in that first 4 year period dedicated just to getting this right. We've spent a fair amount more since then as well.
So Scott, you're a trader, and I know that you've spent many years as a active trader. I've known you for a long time now, over a decade, as a professional trader, and so I think you're the person we ought to be asking about this. So based on your experience and all that you've been through, and what's it like? You sitting on a desk, you're trying to put on good trades, you're trying to find edge in the marketplace, and the signal that you built fires. How are you feeling when that fires? What are you doing as a trader when that signal fires?
Well, typically I'm happy and excited because it's very selective, as you know. So as a trader, I want to put capital to work, and sometimes I have to be super patient because the market's just not aligning. But I'm confident, right? I'm excited because I've got this robust ensemble of systems that are telling me that market conditions are favorable for this directional move. And sometimes I question it. I do, right? I'm human. I've been watching and staring at charts for way too many years of my life. And I don't always agree with it, but I've learned to trust it because it can see things I can't see. It's adapting and updating to what the market's really doing every single day. So, and the track record speaks for itself. We've been trading it for many, many years. It has a high success rate, not just in a given year, but every single year. And it varies. Some years are better than others, but it's been incredibly consistent. So I'm excited when it triggers. And anxious for the next one typically.
So as I mentioned earlier, regardless of the type of trader you are and your experience level, you can utilize our system to augment your main trading activities because the IQ signal only occurs 2 to 3 times a month on average and can be executed in under a minute the few times per month that you do receive a signal. We'd encourage you to attend the webinar where we can offer you this system at a huge discount. So just go ahead, click the link that should be appearing now at the top right corner of your screen. That will open the free workshop registration page in the new window. I think you're going to be pretty intrigued by what we've developed for you. So sign up now to arm yourself with this powerful trading signal before it's too late.